What's up guys, today I'm going to show you two clean trades you could have caught using inverse fair value gaps to scalp base hits on Thursday, October 17th. So right here we have our regular trading hour low, so 9:30 low, and what I like to look at is the fair value gaps that we are delivering from. So right here you can see we have a 15-minute gap and also which is also an hourly gap and a 4-hour gap. I also have a 4-hour breaker, which is a big area of interest. So we did not even tap that level yet, but I know that I can expect some sort of reversal from that level. So this is exactly the level where I want to be looking at to play an inversion setup to the upside. So right here you can see we tapped that level perfectly, and at that point I'm looking for any confirmation to go long from. Okay, I'm looking basically for the confirmation. I'm looking for a sweep of liquidity, then a singular fair value gap to get created when we swept that liquidity pool. And I'm looking for us to go and inverse that gap for me to scalp that internal high here for a base hit scalp. So right here, you wait, and then you have exactly that setup for me. You sweep this low, this internal low, the 1002 low, perfectly. You cannot close below it. You see how you respect that 4-hour fair value gap. Then you have a singular fair value gap created on the 1-minute chart. Okay, if we are truly bearish, we should respect this gap to create a new low. But if we are bullish and we have enough buyers, we should disrespect this gap and we should go and clear out this internal high here. And right here you can see it took one, then two candles right here to disrespect this gap. As soon as you see this, you can long from the close of that gap and with your stop loss just below that body's low here, and you go for a nice little one-to-one here. Okay, boom, get filled here, almost getting stopped here, but not gonna lie, as soon you need to close that position as soon as you see a candle closure below that level, that inversion here. If you wick that level, it's perfect, it's all good, you can handle the heat. But if you have a candle closure below it, you're most likely going back towards the internal low anyways. So in that case, it was perfect. You went and filled this inversion here, price pushed back up. At that point right here, when you swept that internal high, you can take out your profits, but I like going for one-to-ones. So I put my stops to break even at this high, then I wait for price to go and hit my target, and I don't sweat it. I just wait for price to hit my target, so I have a good RR, at least one-to-one. So right here, this was the first base hit trade. Reasoning for it, you have accumulation, manipulation into a 4-hour gap, perfect sweep. You see you cannot close a singular handle below this low here, which tells me, okay, this is a level where I want to play reversal off of. You have a singular leg for value gap, which created, so you created a singular for value gap that was bearish. And after the sweep, if you are truly bearish, you should respect the gap to create a new low. But right there, you have another confirmation that buyers stepped in and are ready to push the price back up to the internal high here. So this is a really clean scalp that you can take on your evaluations on or on your PAs. This works really well to scalp those $200 days all the way to the payout. This was the first trade I took on that day. Then I'm going to go over that action. What I like looking at in the day is the fair value gaps on the 15-minute chart. Okay, these are my POIs that I like to look at inversions and look at the reactions from them. So right here you see we push to the upside. You want to look for a reaction off of the beginning of that gap, the upper portion of that gap. If you can wick this level, this upper portion of that 15-minute gap, and then inverse a 1-minute gap, you know you can short all the way to an internal low. This is a really good scalp. Right here, you see you have a closure above it, so not really interested in that. But then you created two gaps here. created a 15-minute gap right there and a 15-minute gap right here. So right here, I have two options. I want to be looking for longs if we can respect either one of these lows and inverse a singular fair value gap that is bearish to bring my trade all the way up to an internal high. Okay, so these are my two levels. I have a higher time frame PY, so my 15-minute fair value gap, I'm looking for a reaction off of it to scalp a base hit trade. So right here, you see on that one, no trades for that 15-minute gap because you closed below that level. I'm not looking to long that as soon as we closed. Right here you see we closed, but look at the immediate reaction to the upside right after that. Okay, you scalp, you can see that this 15-minute gap gets filled. Okay, and a singular fair value gap was created on the 1-minute chart. What do you have also? You have this internal high, so this should be your main target. This should be the target that you put your stops to break even at, and you try to aim for resting liquidity above. So right here you have also almost relatively equal highs just right here. So this is definitely a trade that I want to be taking. Why? Because we filled a 15-minute fair value gap in discount of this range. Okay, so let's say I take this leg here, pulled back to OT uh, of this move here, and also discount of this bigger impulsion here. So I'm back to discount of the range, tap that 15-minute fair value gap, and I'm starting to displace up as soon as I tap it. This is exactly what I want to see. As soon as I disrespect this gap, this is where I want to look for longs right here. As soon as you disrespect this gap, you go long, you put your stop loss just below this candle's low here. It's, you could put your stop, a hard stop here, but I like really putting a mental stop and waiting for a candle to close bearish below this inversion for me to get out of my trade basically. So it can wick that level how many, like 5 times, 6 times if it wants, but as soon as it closes below this inversion, I'm not looking to trade that anymore. Okay, so right here we tapped the 15-minute gap. If we are truly bearish, we should hold this bearish fair value gap to create a new low, but in that case we couldn't, so we tapped 15-minute gap, swept sell side liquidity pool, and inverse 3 confirmation that this internal high will get taken out. So boom, I go long here, and you see you hit this internal high. You already scalped your $200 day right here, which is what, 0.84 RR. Not bad. You can go for more than that. To be honest, what I like doing, if I'm close to like 0.91 R, I'm good with that. In that case, you can put your stops to break even at this internal high and try to aim for the 1-to-1. Okay, it's how you like it. I suggest you to do that if you're really picky with your RR. So put your stops to break even here. Let's see what it does. And you would still hit your target after reacting to that breaker here. So really a perfect trade here in my opinion. The one thing that could have been, it's not A plus because we closed below the sell side liquidity pool here. If we would have wicked that level, it would have been A plus. But in my opinion, since we had that immediate reaction, you see, immediately when we tapped that 15-minute gap, okay, immediately when we tapped it and swept that sell side liquidity pool, the sellers got exhausted here and the buyers took over and squeezed them. This is exactly what you want to see. These are basically, you can see what order flow traders are looking for, but just by looking at fair value gaps on NQ. Okay, so this is basically what I'm looking for. 15-minute fair value gap fill, sell side sweep, singular leg on the 1-minute chart, inverse, put your stops below, put your stops when, so you put your stops below the candle that created the inverse. So right here, just below the inverse, but it's kind of a mental stop. Like I said, you just wait for a candle to close really below that level and to get out of your position basically. So this was the second trade you could have caught. First trade right here, second trade right here. So 2 base hit trades that you can take on your prop firm accounts to stack those $200 days. Hopefully this helped you out, and see you guys in the next one. Peace out.